Let's go to the market now because we're seeing the ASX down some 6% at the open. It is worse than predicted, and we're talking about some $160 billion wiped off the value of Australian shares in just the last 22 minutes. Ross Greenwood, our business editor, joins us now. Could you say that now the market is in free fall on this trade war?
Well, it's certainly in a significant fall, shall we say. So the market right now is down 6%, as Laura says. It was already down more than 10% from its peaks only about 5-6 weeks ago. Here is the market as we speak. There's a live prices coming through from the ASX. The market down by 6%, as Laura says. So the market was expected on the opening to be down a bit over 5%. It's actually accelerating even more than that. We'll take you through some of the stocks as we get through this to show you some of those companies that have fallen, because we can tell you there are some big falls. BHP is one that I know is down almost 9%. The Commonwealth Bank has had a big fall as well, but it's companies like Ampol down more than 8.5%. It's BlueScope Steel down 7.2%, AGL Energy down 6.2%. So these are big falls for the major Australian companies. It means, of course, that anybody with their money in index funds or indeed in superannuation, that's going to be effective. Here's some of the stocks that are falling hardest as we speak. You can see Commonwealth Bank shares, the biggest company on the market, down by more than 7%. You can also see those BHP shares were down close on 10% at one stage, now down close on 9%. And even Fortescue, iron ore, of course important, down by more than 7%. So we'll bring you more of these live prices as we get them to hand. But Laura, it really is, it's a big fall. It's reflective of what took place. Now, to be fair, this
Wall
is...
Street.
Yeah, on Wall Street. And we'll show you Wall Street as well, because let's go to the Dow Jones and what happened on Friday that has triggered this big fall in Australian markets. And what you can see here is the Dow Jones down by 5.5%. The Nasdaq, the tech-laden index, down 5.8%. And the S&P 500 down 6%. Our market has gone further. Now, the reason for this is not because particularly the tariffs. It's actually the fear of recession. So that is the big thing that's driving it. Strangely, Australia could do quite well out of the tariffs because a lot of cheap goods will flood into Australia, but that's not good for Australian industry and certainly not good for businesses in Australia trying to compete against imports. That's one of the reasons why you'll see BlueScope Steel down significantly. Steel makers will do particularly poorly at that time. The second factor is the risk of a global recession. Because that's increasing, then the whole world goes into a funk. The real worry about that is the attitude of government. And of course, we're in caretaker mode at the moment because of the election. There's not a whole bunch that government can do immediately except sit back and wait and watch. But of course, it's the other response that comes from the Reserve Bank that's going to be so interesting and important as well.
Yeah, we'll get to that. But we heard Donald Trump, he was speaking on Air Force One just before the market opened, actually. And he was saying, well, sometimes you've got to take your medicine. The reporters there were peppering him about how long he's going to let the markets fall until he starts to reverse some of these tariffs. He is sticking with it. And perhaps is this why we've seen these sharp falls? Because investors aren't, discounting what he says anymore. They are worried about fears of a recession and essentially a prolonged period of uncertainty, Ross.
That's exactly what it is. Now, who's to say that Donald Trump's strategy doesn't work? That a lot of factories come back to America, that it makes America great again. What markets are worried about is what happens while you're trying to build those factories. And that could take 2 to 4 to 6 years. How long does it take to make a steel plant? How long does it take to make an aluminium plant? How long does it take to make a semiconductor plant? That is the fundamental issue. In the meantime, while these tariffs are there, the price of goods in America rises fast. So therefore, there's every chance that America sees significant unemployment, and also there's a significant downturn in economic activity there. Of course, it's also China retaliating with its own tariffs that have a very big impact. Here are some of the other stocks we can show you. Now, the reason we're showing you some of these, Evolution is a gold miner, so even gold prices got smashed after it had been really the one thing that had been standing out. Some of these other stocks, though, are stocks that either are in America or indeed are affected by America. Ampol, for example, affected by oil prices, which have fallen. Breville is a company that makes goods in Asia and sells them to America. So coffee machines, whatever it might be, it's been especially hard hit over the last little while. Travel stocks have been affected because, even though the price of oil might come down, which is technically good for travel stocks, everything is affected by this. So you can see that really these things they're not isolated. It is significant. Here's the oil price, down by some 5.37%, $63 a barrel. So strangely,
wow,
this
that was
takes
at 80
it
like
was.
a couple of weeks ago, wasn't it?
It was, and you can see it there, even above 70. So it's fallen pretty aggressively. That means your petrol prices will come down, although they're affected, and we can show you this, by the Australian dollar. So let's have a look at the Australian dollar, which over the weekend did fall into the 50s. It's back there now. So 59.9, give or take. It's around about that 60-cent mark. It was always suggested to be there. So really seeing the Australian dollar as low as it is shows that's the buffer that really keeps Australia competitive when the markets are falling in the way in which they are.
So the Reserve Bank's got all the levers at the moment while the government is in caretaker mode. What will it do here, Ross? Because obviously, like investors, the Reserve Bank would be worried about a prolonged economic downturn, not just in America, but Australia would never be immune from something.
And the one thing it can do is cut rates and cut them quickly. So I pulled out some data off Reuters this morning. This is money market odds. So this is from here until December. So if I look, say, for example, even at next month, there's an 85% chance of an interest rate cut next month in May. But if you go out until December, what you can see is there's a 100% chance of at least one rate cut. There's a 99% chance of 2 rate cuts, an 87% chance of 3 rate cuts, and a 58, nearly 59% chance of 4 interest rate cuts this year. In fact, there's even suggestions, lesser so the odds of even 5 rate cuts. But I left it at 4 rate cuts. I thought that was probably reasonable, but it shows you that even in these past few days of markets have rocked around, the odds of those rate cuts have increased significantly on money markets. So what's happened is that bond prices and therefore interest rates have fallen. Bond prices gone up, interest rates gone down. And this is as a result, again, of the risk of recession. People wanting to be defensive, throw their money into cash, throw their money into government bonds because they figure that's the safest place to be right now.
What about superannuation? Retirees will probably not be logging on to look at their accounts today. But I want to ask you, and this is a question that we're getting for a lot of our viewers.
I'll give you a small hint on that on the superannuation, right? Yep. So the typical fund in Australia that most people would be in, a balanced fund, would have 40% in Australian shares. Now, Australian shares are down the best part of 16% from their peak. So you've got to sit there and say, well, that's give or take going to be the best part of 10% or something like that. Then they've got another 20% to 30% in overseas shares. They're down not quite as much, but probably down by about 12%. So there's another bit of it gone. So probably if you tried to really say from here until June 30, what is your super fund looking like? This is going to be one of those years which happens once every 7 years or so where your money goes backwards if you actually took it as of today. And so really in many ways people have had great runs as stock markets hit record highs, but now the problem is going to be, especially for people who might be considering retiring, they might have to seriously rethink their plans and stay in the workforce for as long as they can.
Right, well, that's a scary proposition for many, I would have thought. And I just quickly wanted to ask you about the cyber attacks on our big superannuation funds. This is seriously concerning. We don't really know what the losses are, and coupled with these share market losses, and this is a question that many retirees give me here at AM Agenda, is how do you know the difference between the losses from the share market and the potential losses from a cyber attack? Will there be the regulator that makes sure there is a clear understanding of where those losses are?
See, to me, I've got a big problem with this because if these industry super funds that have been affected by this, they don't have reserves of their own necessarily. So in other words, it's shared between the group. Now, I'm not particularly comfortable about that. The organisation should have reserves of their own if it's of their making. why is everybody else actually sharing the pain? Now, it's supposed to be very small, but there's a principle here for the future that needs to be thought about, especially with mutual organisations like these are. And especially if now all the directors are all covered because they all have directors' liability insurance, of course. They wouldn't otherwise do it. But there is a big issue here about whether our big super funds now are becoming too big. It's been a conversation that's been had for quite some time. And of course, government is trying to centralise more power, especially with some of the tax changes that they want to have more people putting their money into industry super funds rather than doing it themselves. Tell you what, Laura, before we go, let's have a look at the ASX 200 and just see where it sits at the moment. We should be able to bring that chart up. We can see it's down there in the corner there. We'll keep updated with you during the day because it obviously is a very big day for our stock market and for investors all around.
So we can see at the top of the screen there, a tiny rating, but just below 6% now. So it's come back a tiny bit, but you expect that to be volatile throughout the day.
Exactly, it will be indeed.
Ross, thank you.